Welcome to another episode of Talk FS. Today I'm joined by an excellent guest, Lewis Shaw, a self-employed mortgage advisor who regularly appears in the national and industry press for his expert input. Lewis made the transition into financial services following a career in the military and has since become a trusted voice in the mortgage world. From fast-tracking through his CMAP qualification to navigating the post-COVID mortgage landscape, Lewis brings a refreshing and grounded perspective to the profession. This is a great episode for existing and aspiring mortgage brokers. Lewis, welcome to the podcast.
Hi, Ryan. Thanks for inviting me.
No problem at all. So I love hearing how people join the industry. So you were previously in the military and you came into mortgages. That's not always a natural transition. So how did you fall into the profession?
Well, it was by accident. Yeah, I mean, that's true. It was by accident. So I was in the military and I was living in London at the time, and I was medically discharged from the military. And during that process, the military have something called resettlement, which is where you get a period of time and some funding. I don't know if this is still the same now, in order to retrain and prepare you for moving back from military to civilian life. I was thinking, what am I going to do? What career could I do? What job could I do? And I really didn't have a clue. And I was sat having a drink with a friend from university. So I was at uni in London years and years before that. I was sat having a chat with a friend called Mark. And he'd become, after our university, he'd gone into financial services working for an IFA. And he'd been doing that for years. I was chatting to him, I really don't know what I'm going to do. He said, well, what about doing mortgages? I said, okay, carry on. He said, well, you'll pass the course easy enough. He said, and you can talk to people. And he said, and that's really all you need to do. He said, you understand numbers. Why don't you have a look at that? So it was just a chance chat over a pint in a pub in London. And I thought, yeah, okay, then I'll have a look at that. And I went on when I was in the army, I went on the army resettlement website. And then you kind of look for training providers and course providers that are affiliated and have like the requisite kind of sign-offs that can be funded through the resettlement scheme. And there was one that popped up from New Leaf Distribution, which is a network, but they also act as a training provider. And the owner or former owner, Mark Hobbs, used to be in the military himself, I believe. And so I had a look at that. And there was a fast-track CMAP course. So I said to my resettlement officer, well, I think I'm going to do this. So went through the rigmarole of getting all the numbers in and all the different kind of bureaucratic stuff you have to do in the military. And then I went on my CMAP course down in Southend-on-Sea at New Leaf's training, in their offices, and they had a training place there. And that was in, I want to say 2014. I think it was 2014. It was summertime. And there was 2 4-day sessions. The first 4-day one was for CMAP 1. And then the second 4-day session was for CMAP 2 and 3. And they'd say, look, okay, the thing to do is come and do the CMAP 1 course and then book your tests straight after and do your exam. And the same for the 4-day CMAP 2 and 3 course, book your test and go and do the exam. So I did those. Took the exams in one of those Pearson View centres it was in Chesterfield, in fact. And yeah, within a couple of weeks, I was CMAP qualified, which is bizarre, really, to go from not knowing anything about mortgages to, okay, now you're actually qualified mortgage advisor. That's a bit scary because the way I think about it is it's essentially giving the keys of a car to someone that's just passed the theory test but not got any practical experience. You know, you've all of a sudden got this qualification that allows you to be regulated by the FCA, start doling out mortgage advice to people, but you don't have any real world skills of how to do it. So that was my entry to the industry. And I got my first job working for a brokerage in London. I covered a couple of offices in London for an estate agency group that had a financial services arm. And I worked out of London Bridge, just off Bermondsey Street, around the corner from the Shard, and a branch in Kennington as well. And that was it. So went through the onboarding process with the network they were a part of, and then straight into it. Thankfully, there's a guy called Tom Cleary, who's still a mortgage broker. He's been a mortgage broker for donkey's years. And he took me under his wing and essentially taught me how to do the job. And I was very, very fortunate that I managed to land into a brokerage with someone like Tom. He's a great guy, tons and tons of experience. And it was only a couple of years afterwards, because he showed me how to do the job, taught me what to do, how to approach things, etc., the processes to follow. It's only a couple of years afterwards I realised how lucky I'd been in having him as a mentor, really, because it was just look of the draw. But I realised how much he had taught me and how much I did know in comparison to some people that come into the industry and don't have the benefit of a really kind of wise, well-experienced broker to say, right, come on, let me show you what this actual job entails. So that's how it started.
Fantastic. Well, your story does relate, I think, to a lot of people I've come across in the years of doing what I do, where we've done as a business lots of content on the CMAP, and we still get people who sort of say, right, I've got my CMAP now. I'm a mortgage advisor. It's like, yes and no. You've got the qualification, and I think your analogy is perfect in terms of the keys to the car, but actually have no practical experience. For a lot of people, and I know, you've got to make sure your bills are being covered, but an aspiring mortgage advisor needs to make their decision on where their first job based on the training, the mentoring, the coaching, the support that's there more than what the highest paid job is. Because if you get that first job right, it really then sets you up very well. If you get it wrong, you have to unlearn everything and relearn it in your next job. Yeah, it's interesting that you mentioned in terms of it taught you a lot about mortgages. Do you feel the training taught you enough about the soft skills needed to be a mortgage advisor?
So when I did CMAP, it was very much you read the books, you learn the content, you pass the exam. And so no, to be fair, the new Lease training academy is good, and I think it's the right way to do it personally with people around you in a classroom environment. I think that's probably the right way to do it. I know now it's popular to do stuff online or by distance learning, all the rest of it, and that has its merits and has its place. But I think when you don't have any real world experience in an industry, to be able to sit with people and gain a better understanding, I think it is the way forward. But no, in terms of soft skills, I don't know what CMAP's like now. Obviously, I've not taken it for a long, long time, but certainly it did feel as though it was, to a certain extent, a tick box exercise, which I guess it is. I mean, and honestly, should I really have been able to pass it in 2 weeks? Probably not. It probably says the bar might be a little too low. And of course, I benefited from that. So I don't want to come out. That sounds very hypocritical of me. And I don't mean it in necessarily that way. Thinking about how much knowledge and experience I have now after a decade plus of doing the job in comparison to walking out of the exam centre having been told, yep, you've passed, away you go. There's a world of difference, an entire world of difference. And I do think we could probably do a bit more for new entrants in terms of the training and the qualification, especially because how the mortgage market has changed and adapted over time. It's become more involved. The compliance element is significant, and consumers now, I think, expect a bit more from a broker rather than just here's a rate. There are so many more other facets to it that you have to cover off that often consumers have never thought about. That's not their fault. That's not because they're stupid or unintelligent or anything like that. It's just that if it's not your day-to-day job, then you're not going to know that kind of stuff,
Yeah, definitely, especially where it's not really being taught in schools at all. So you really are having to educate a lot of people on a lot more than mortgages necessarily in terms of what can stop them getting a mortgage, whether it's their spending habits, whether it's credit issues they have. Then you kind of have to unpick it, and it's not necessarily your job to have to go and educate them on it, but for them to be able to achieve what they want to of buying X property or remortgaging or whatever, then that is the service you have to offer. So to do that educational piece, people learn in different ways. And when you're having to sort of say, well, what you did back then wasn't necessarily ideal, that you've got to deliver that in a certain way, haven't you?
Yes.
You don't want to upset anyone. You can't change the past. But that will impact the rates that they can access or how much they can lend, and ultimately change where and what type of house they live in, potentially.
I mean, I think a good way to think about this is rather than, so for any brokers out there, this is just my view on things, and people will have different views and may well disagree with me here. But I like to try and often think a bit differently about most things, just because that's the way you learn, right? In terms of you take a concept, you take an idea, you take a process, a system, whatever it might be, and you go, okay, well, what about, just because this is how it's always been done, does that mean that we can't kind of tinker and change it, etc.? And I think one of the best ways to focus the mind on this is, rather than going, what's the best deal I can get? What's the best mortgage for me? Blah, blah, blah. It's to actually completely flip that on 180 on its head and say, we're not looking for the best deal. We're seeking to avoid the worst outcome. And I think when you think about it in those terms, when you think about there are lots of things that can go wrong. Let's try and avoid as many of them as possible. And that, I think, can help certainly consumers, because it turns the attention to not the upside, but what are the potential downsides? Because they're the bits that matter, right? It's that whole thing in terms of, when people are trying to predict where things will go, or what'll happen with the economy or with mortgage rates or blah blah blah. It's like, no one ever predicts the bits that go wrong, and yet it turns out they're the ones that really matter.
Yeah.
So I think kind of just switching focus sometimes can help with that, and I think that can drive better outcomes personally.
Yeah. Now, does that then have a bit of an impact on sometimes when you're speaking to a client for the first time who's come across you and you're sort of going, let's avoid the worst possible outcomes, and maybe they've spoken to another broker, whether it's the estate agency recommended one or whether it's the bank or whatever, and they're saying, this is the biggest amount of mortgage I can get you, which obviously means they can go off and go get a bigger property or something, and you're saying, well, let's be realistic here. Do you feel like you lose a bit of business because of that approach at all?
No, I think, to be honest, if anything, it's the opposite. I think because I treat it as, I'm not here to just sell you something, and it's more, I try and position it more as a holistic type of service. I think if anything, that helps me win consumers and win clients, because I'm not just, when you look to avoid negative outcomes, you are directly taking an interest in that person and their well-being, as opposed to, I can do, crash bang wallop and I can get you 6 times your income. Well, okay, but let's just hold the horses. Let's think through the options. Let's think through the potential downsides here first. Because if something does go wrong, that could be pretty life-changing. And I think it's sometimes about slowing people down and really getting to the nub of what they want to achieve. I often think about it like it's a map, right? It's a map and not everyone's got the directions. You're at point A, you want to get to point B. And if you follow me, I'll get you from point A to point B as quickly and as efficiently as possible, whilst avoiding all the potholes, all the wrong turns. That's, I think, the way to think about it. And I think delivering mortgage advice in that way is generally, I think, it leads to better outcomes. That's anecdotal. I've got no evidence to back that whatsoever. But I think that's the right way to go about it.
Yeah. And I imagine that approach, because you've got that old, consumers versus clients. Clients is when they're returning. Well, that approach is probably because they really value your care and interest in, if it goes wrong, they're going to return. Whereas if you've sold them the biggest possible thing and it does go wrong, I imagine you're probably not going to be keen to pick up the phone to them or answer the call when they're calling. And you don't want to have that guilt. You don't want to have that feeling, do you? If this is a career, you need to be able to weather the storm.
For sure. And it can be, I know this is kind of first world problems, right? I know it is. There are a lot of people in the world that have got much harder lives and stressful lives. I'm aware of that. So this is very much first world problems. But doing the job, it is a big responsibility. And it is a lot to carry on your shoulders. And I think sometimes there's a danger that we can sometimes become too blasé about this. You have to put yourself in the consumer's shoes and remember that for them, borrowing 250k is a massive deal. For me, it's just another Monday. That's the reality. When you're doing when you're arranging millions of pounds of mortgage finance, week after week, month after month, you can sometimes become kind of snowblind to it. And so I think it's always worthwhile remembering that, put yourself in their shoes. And that's why I think it helps to think of let's avoid the negatives rather than try just to solely look for the positives. Because you then kind of bring it back to, for this person, this is a massive thing. We're playing with people's lives. It's really important. I do think there's a tendency sometimes to undervalue the benefit of mortgage advice. Not just the whole, can you get access to more lenders and better deals and all the rest of it, but to actually think through what someone's doing. Have you really considered all the options here? Have you really looked at all the angles? Because most people, I'm really, really interested by behavioral economics and behavioral science. I find it fascinating. And there's always that kind of optimism bias where we're only ever looking at the upside. We always overplay the upside and underplay the downside. And it's just a feature of human beings. And even when we're aware of it, it's very difficult to guard against. But I think there's more value in that than there ever will be in saving 0.2% on an interest rate.
Is there anything along your career that was a catalyst for you to think this way, or has it always been your approach?
No, it's not always been my approach. No, it's like anything, it's kind of evolved over time as I've become more experienced and hopefully more knowledgeable. You pick things up from one of the best places to think about, to get different ideas and differing opinions is to talk to all the mortgage brokers. And I'm very fortunate that I now know a lot of mortgage brokers, and it's the continued kind of learning from one another. Because no one's got all the answers, right? Every day's a school day. And I think as long as you go into it with that mindset that, you can't ever possibly know anything because it's a dynamic market. Things are changing, policy changes, the government makes changes, consumer habits change. And so I think as long as you remain open to thinking differently about stuff, that's the safest place to be. It's when you kind of close your mind and just believe there is only one right way, that can then lead you down a path to making poor decisions sometimes.
I think that's sometimes good, isn't it? That it wasn't a one-time thing that completely flipped the way you approach it, that it's organically come about of this way of working. I think, obviously, hopefully today's episode can, inspire a bit of thought for those listening in terms of flipping it on its head, like you said, in terms of avoiding the worst possible outcomes instead of just trying to obtain the best possible amount or rate or whatever it might be. I do think that's quite refreshing. And I guess when you're talking about avoiding the worst possible outcomes, protection's a big piece of that as well then.
Yes. So with protection, again, I think I'm not the best protection person.
Mm-hmm.
I got myself some coaching with a guy called Gary Waters to try and improve my protection skills, not just from an income perspective, but of course that does matter. Let's not pretend it doesn't, but it does. But positioning things in the right way to drive the right conversations to get to the right outcome. Because not everyone does need protection. Most people do, but not everyone. Some people already have it. Some people genuinely don't need it. But that's a very small kind of percentage of the market. And when you look at the actual stats in terms of the protection gap, the amount of people that should have it and don't, or could have it and haven't, it's enormous. There's a big skill shortage, I think, for mortgage advisors when it comes to protection. I've been guilty of it. I know a lot of mortgage brokers are guilty of it because sometimes we can go through a kind of tick box exercise where I've talked about it, I've offered them the option to review it, and they've just said no. And the truth is, this might get me a bit of hate. We've got a tendency to talk a good game, but delivering it and talking about it are two very different things. I found that positioning protection as, let's have a look at your financial resilience, is the way to do it. And again, it feeds into the avoiding the worst possible outcomes. Let's have a look at your financial resilience. Let's just run a couple of stress tests. If X happened, what would be the outcome? If Y happened, what would be the outcome? So you move from selling to advising, and that tends to lead to the right options and the right plans kind of just revealing themselves. Now, lots of people, if you just sat down with someone and said, you should have some life insurance, critical illness cover, and income protection, it feels very, this person is just trying to sell me some stuff. But if you sit down and go, right, look, let's go through your financial resilience to make sure that you're going to be looked after in the event that something goes wrong. That is the right way to go about it. And if after that they say, do you know what, I'm just really not fussed, fair enough. I've done my job. I've positioned it. We've had a chat about it. I've explained the risks. And now it's on your shoulders. That's all you can do. But I think it's important to have a defined process of how you do that, how you approach it, in order to try and get those conversations flowing. Because no one likes to think of their own mortality. Who does? I mean, who wakes up in the morning and goes, do you know what I think? Do you know what I think today? I'm going to consider some income protection. Or, do you know what? I think I might get some critical illness cover. No one wakes up and thinks that. And so it is incumbent upon us as advisors to have those conversations. And sometimes they're not particularly nice. You know, no one likes to talk about getting cancer. Who does? I mean, I'm fortunate and unfortunate at the same time in having. So my mum had cancer. She's not particularly well right now, but she had cancer many, many years ago. And I've seen firsthand what that looks like. I've seen the financial impact. I've seen all the medical stuff. It's not nice, but it's very difficult to get that across to someone if you do kind of position it almost as though it's just a sale rather than a look. I've seen what this looks like. Trust me, it ain't nice, you know. So yeah, I think there's a lot to be done on protection personally.
I think the important bit is to be aware of your own strengths and weaknesses when it comes to it, because then you can adapt around that then, can't you? You can make sure that you bring it into the conversation early enough that it doesn't feel forced upon at the end, and they've stopped answering the phone to you now because they're like, Lewis, you've got me what I wanted.
Yeah.
Why do you want to talk to me? It's just, you know, you can adapt it, and the fact you've taken external training for it as well is important. The other thing we've touched upon here is it will organically evolve in your own skills. While you admit at the moment you might not be the best at it, 5 years time something might be different and you might be fantastic. But also you can, because you're aware of it, you can do something about it today, which is important.
Exactly that.
So during our conversation, we've touched upon some of the changes that you've seen. Now, you've been a mortgage advisor for a number of years now, and that goes back to about sort of 2016, I think, from memory, around that sort of, 2015. So for the last 10 years, you've seen quite two different markets, which, funny enough for you, sort of sits right in the middle, doesn't it?
Yes.
5 years pre-COVID, 5 years post-COVID. When we've talked previously, you've mentioned that COVID did have a bit of a lasting impact on the mortgage industry. Obviously, we know full well, you know, the record lows of the rates, the record, you know, highs. But how do you feel it sort of changed consumers' behaviour and mindsets towards the mortgage world?
Sure. So I think history will look back on this period of time, and they'll be able to pinpoint COVID as the kind of inflection point for a lot of things with regards to consumer behaviour, advisor behaviour. Pre-COVID, no one knew when a Bank of England base rate meeting was happening. No one cared. No one discussed swap rates or gilt yields. It wasn't a thing. People, they wanted a mortgage because rates were still, you know, even before the kind of COVID, the real COVID lows, rates weren't excessive, and it was more a case of, I just want to get a mortgage and I want to get a good deal, and that was it. And then we had COVID, and kind of the world fell apart, and everything changed, didn't it? I think this all leads in that there are a few different streams here, not least COVID, but also the continued rise of social media, information and misinformation, importantly, or disinformation, however you want to phrase that. And we've seen wild swings in terms of what lenders will and won't do, interest rates from, you know, crazy lows to, you know, spiking highs over a very short period of time, along with the ways that people have changed accessing financial services, whether that's now more remote as opposed to it being predominantly face-to-face, whether it's about it being over the phone rather than on a video call, for example. And now it does seem as though I think consumers often want more from the broker than perhaps the brokers can give them, because people are very rate sensitive, understandably so. You know, we're talking about, you know, if there's a change in an interest rate between 2% to 1.75%, it's not really going to change the needle. Yeah, it's better if you get it slightly, but it's not going to really change the needle. When you're talking about going from kind of 1% to 5%, that does. So people are very much more rate driven and rate sensitive. And I think that comes at the exclusion of other important metrics that I think personally are more important. Well, that's where I get into the whole kind of let's avoid some negative outcomes as opposed to just searching for the best one. And I think there's now, because of the amount of information, because of the continued rise of social media, there's now an expectation, I think, that consumers want brokers to essentially tell them what they should do and take responsibility for that. That's a very dangerous situation to get yourself into because we can't know. I mean, with the best will in the world, most economists are wrong half of the time. Even the central bank managed to miss the inflation warnings and then react too late to them, some will say. And then perhaps them reacting too late now as kind of the economy looks like it's faltering a bit. And there does seem to be now kind of this interest in broader kind of macroeconomics from just consumers. And so now people are asking about swap rates and gilt yields and what are interest going to be like, and where should I fix for 2 years? Is it going to come down enough, and blah, 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 that kind of stuff. And I think it's very easy, particularly for new advisors, new entrants, to get drawn into those conversations. And it can be very easy to want to show off your knowledge and skills and fall into the trap of getting into those discussions. And I think that can be dangerous because we don't know. We can't know. If we could, let's be honest, if I could know where interest rates would be in 6 months, in 12 months, in 24 months, I would be making a lot more money somewhere else,
I'd be talking to you on the beach right now, wouldn't I?
Yeah, exactly. Exactly, yeah.
Yeah, it's really interesting, isn't it? What's changed in such a short space of time, and it must put additional pressure on you as a mortgage broker in terms of the length of time you need to spend with clients as well to provide them reassurance throughout.
One thing I have noticed is, and I think this is because of often social media and sometimes what they may see on TV, I spend as much time unpicking the wrong thoughts as I do trying to stitch the right ones together. Well, I've seen, I heard that X, X is the case. Right, okay, that's not true. Let me explain why. And then let's actually go back. So there's stuff like that, where they'll have seen a TikTok video or a, social media or a TV influencer stand up and say something in front of millions of people. And I'm just kind of sat looking at the TV screen, head in hands, kind of thinking, oh, here we go. I'm going to get calls about this tomorrow. I just guarantee it. And so I think I do think that the kind of authorities, the powers that be, maybe should look at doing something around this, because some of the stuff that you see can lead people to making the wrong decisions, getting the wrong end of the stick. And particularly when it's from voices that they believe they should trust, it can be very difficult to unpick that. And I think that is going to be a continued risk going forward, because social media is not going anywhere, is it? Let's be honest.
Do you see it easing up, or do you see it getting worse in that problem of people having the misinformation?
I see it getting worse, and I'll say for why. In the last couple of months, I've started talking to customers, and it happened the other week, in fact, where someone challenged me on what I was saying based on what they'd got from ChatGPT. And I thought, I can see where this is going. So when there's an inordinate amount of information at someone's fingertips, there's invariably going to be mistakes that are made because people will take that as gospel. And I had to say, look, ChatGPT, it's great asking it a random fact, but it's not at the point, I know obviously some people will disagree with here, but it's not at the point where it can make a judgment, because there are questions and there are facts that you won't have given it, that you don't know you need to give it in order to get anywhere close to a right answer. And so I see with the rise of AI, and I think this will happen quite quickly, I think people will start to become overly reliant on it and could lead themselves down the wrong path.
And it then gets to the point as to when do you walk away from that individual who's inquired with you, when you know that this is, if they don't take your response well, is this just going to snowball? And you got to be cautious of your own time, but then also for someone who clearly is very fueled by doing the right thing, you also don't want to walk away from that person and let the next broker who doesn't challenge them and just lets them bamboozle them with the facts they know, take something out wrong. So it's real, that balance. Do you walk away? Do you
Yeah.
carry on and know it's
I
going to be a time drain?
Yeah, I suspect AI is going to be a challenge. I suspect AI is going to be a challenge. I think it's got, fantastic applications, and it could be really, really useful and drive meaningful and positive change across across the entire economy. But will we look back in kind of 15 years and go, we probably should have put some regulation in here to control this before we let it loose? I think we might, but time will tell, I guess.
Yeah. And I guess for you, where you're 10 years in as a mortgage broker now, you've got returning customers. Is that where you see that's something you'll be better off than if you were joining the industry now, because you've got a bank of people who've gone through the process with you a number of times before? I imagine from what you're saying there, then, if you're new into the industry, you've not got the hard yards in behind you, it could be a daunting place then.
Yeah, for sure. I mean, I think my generation, kind of millennials, I think I'm a millennial anyway. I think we're quite fortunate in that we saw the pre-internet age and the internet age right at the time it kind of happened, and the pre-social media age and then the social media age. And I think it's going to be the same with the pre-COVID mortgage kind of space and the post-COVID mortgage space. We're very fortunate to have kind of gone through those things. I think if you're coming into this industry right now as a new starter, yes, it's difficult. I think it's difficult. I sometimes think that, like you mentioned at the start, the soft skills could do with more kind of finessing. But I think fundamentally the issue is when you haven't seen. So if you think for the past 5 years, we've not had a normal mortgage and property market. We just haven't. Whether that's kind of crazy low rates, stamp duty cuts, stamp duty holidays, and then the mini budget and everything that all the kind of fallout from that, raging inflation. For anyone that comes into the market now, they've not seen just a very kind of normal, kind of still, flat, kind of run-of-the-mill market. I mean, I do say to colleagues of mine, like, it would just be nice to go back to 2019 when, mortgage advisors weren't seen as like the fifth emergency service sometimes. So I think, yeah, as a new entrant, it's difficult. And particularly with the rise of AI, without a client bank, especially if you're kind of going to go out on your own and do it in the same way that I have, my own little business, that can be extremely challenging. And I think sometimes we underestimate the resilience sometimes that you need, because it can be a lonely job. It can be a stressful job, and you end up stressful in so much as you're often carrying like this, almost like some kind of anxiety transference from clients to you. And that you have to kind of manage that well. I think, certainly I know of people that have struggled with their mental health through this period. It's not been easy. And the sporadic nature of the market, how one government policy these days apparently can kind of just turn the market on its head, that can leave you with a sense of kind of just continued anxiety as to, right, what's the next thing they're going to do that's going to spark something off that that was entirely predictable, but they all seem to have missed. So I do think the kind of the resilience that you need, and the sometimes the empathy, because for a lot of consumers, particularly when they're coming off the lower fixed rates, if you're someone that's not felt that yourself as an individual, the kind of empathy you need to help people through that, is, you can't read it in a book. You just have to get into the trenches and do it.
Yeah, fantastic. Any final sort of piece of advice or tips for those listening who are a mortgage broker right now, who maybe feel a little bit bamboozled at times? Any sort of advice to those?
Yeah, so basically just find someone that's got a lot of years of experience and lean on them. That's the best thing to do. Just if you're unsure, go and ask someone. Seek out people that you can kind of resonate with, that you can bounce off. Don't sit and stew. That's the worst thing anyone could do. As I say, I know that some brokers have suffered with the mental health, and the best thing to do is always just have a chat with someone. because it can be a stressful job. It can be it's a very rewarding job. I don't just mean financially, but actually helping people get on with their lives. It's I think you've got to have that kind of thing about you where you actually enjoy that. You've got to be good at talking to people. You've got to want to talk to people. But certainly, don't sit and stew and don't feel like you're on your own, because everyone else is in the same boat. And all you need to do is probably pick up the phone to someone, have a chat. Most of the time, they're good eggs and they're going to listen, and they'll probably give you some decent advice.
Well, I think that's an excellent place for us to end today. Really appreciate your time, Lewis, and it's been really interesting to go through your journey, how you've organically evolved, how you approach your service as a mortgage professional, and some real key takeaways for those aspiring or already in the industry as well to sort of take away. So thank you very much for joining us. And for those listening, please do subscribe. We aim to continue to provide valuable pieces of content like this through speaking to fellow professionals like Lewis. So do subscribe and look forward to the next episode.
Thank you very much.